Hey, this is Sasha Evdikov, and welcome to another episode of Let's Talk Stocks, episode number 136. And in this episode, what I'd like to do is share with you how much money do you need in order to get started in trading, and how much can you actually make. Now, I've talked about this in a couple of other videos, actually, which I'll link below this video that you can get some insight on. One of those videos was talking about percentage of growth, meaning the market goes up in a certain percentage. How much can you make based on the percentage that you make? The other video took expenses into account, looking at movements and fluctuations within the stock market, meaning within how much can you make because a certain stock, let's say $100 per share, might move $1 or $2. So there's two different ways and approaches that you can really take within that. And go ahead and watch those other videos if you need some additional clarity, some additional information as far as doing your own calculations. But in order to get a precise answer, it really comes down to you doing the homework and understanding where you're at personally. So in general, you could really just start trading with $500. I mean, you could open up an investment account with $500. You could open up, let's say, a margin account for $2,500. At least I believe that's what the current regulation is. Of course, things may change in the future. But in order to get started to answer this question of what's kind of feasible, what's realistic, I'll give you both of these scenarios as far as doing your calculations, as far as doing a percentage calculation, and then also taking into account, let's say, more active trading on a per stock basis and seeing what is it that you can actually make. So here, before we get into that, let's look at the expenses that you may actually have on a day-to-day lifestyle, and also take those into account. And that way you can see, well, as far as trading for a living, is that also going to be sustainable for you? Or what is it that you need to make? Now keep in mind, some of these expenses are going to be different for everybody. So again, do your own homework, do your own due diligence, and do some calculations. But I'm just going to share with you the guideline or the process of how you can do it yourself. All right, so what I've actually done here is just wrote out a few different categories. Again, you might have more categories in your own personal life. And just to give you some ideas as far as expenses go, where those expenses and where does that money go for? And this is just kind of the average of what a middle class or a normal person might have. Now, for you, of course, if you're really dedicated, really determined to save a lot more money, you could lower some of the things on housing. So here I have kind of a list of what some people will pay depending on the city you live in, depending on your location or mortgage and so on. So let's say anywhere between $600 a month to $3,000 a month could be your housing situation, right? If you're really motivated, you could go ahead and live in your car while you go to a job and accumulate a lot of money. But of course, that may not be suitable for everybody. Utilities also around $150 to, let's say, $500 per month, okay? You also have food expenses, okay? For people that maybe eat at home more frequently or really budget friendly, could be $200 a month if you have maybe a single person household. If you have maybe more people in your household, it could be more expensive and you're going out to eat. It could be $3,000. It could be a lot more, really. It just depends, again, personally, just to give you some ideas and insights. Transportation, if you're a person who walks to work and you don't need a car, you don't need a bus, then again, it could be a lot less. It could be $100, could be $800. Student loan debt, credit cards, it could be medical bills. Let's put down about $100 to $500. Okay. If you're doing something in savings, it could be $0 for some people. And I say that because your savings could actually go back into your trading account, right? So that could be your savings, or it could be 500 or more where you have a separate savings account that actually moves money away from your trading account, right? Because I'm talking about all these items actually cost you money or move that money away from your investment account. Clothing, again, there might be 2-3 years where you don't need to buy clothing. For other people that are a little more active with their clothing, shopping, they want that self-image, it could be more. It could be $500 a month. It could be $500 a day if you're spending $500 on jeans or some of those premium brands. Again, totally up to you. It depends where you're at. Obviously, the more expenses you have, the less you'll have in your trading account as to get things started. Same thing with entertainment. Could be $0, could be $100 a month, could be $10,000 a month which I know a buddy of mine went to a Super Bowl, and his tickets and all the time he spent there, it's about $10,000 for a day trip, right? So in either case, it really just depends how much entertainment costs you as well. And then taxes. This will be different for everybody if you take those things into account, and miscellaneous expenses, let's just put in a few dollars in there. So what is your total? Well, I mean, again, if you're kind of somewhere in that rough range, let's say on the housing, $1,500, $2,000, and then somewhere in here about $1,000. So you could be somewhere around $3,500. Now I know some people's mortgage is just around $4,000 or $5,000, and that's a fairly normal mortgage, especially if you're living in somewhere like New York City or even LA, and that's just for a basic apartment. But again, kind of gives you an idea. Do your own calculations depending on where you live, your situation, come up with some numbers for yourself, so that way you get a number. In this example, I'll just use 3,500 as just a general guideline. Of course, with inflation, if you're watching this video 1 or 2 years later, this might increase another 5 or 10%. So keep that in account. But this is just a starting point to get us to our next stage in the conversation process to see, okay, how do we make some calculations of how much money you will actually make? All right, so there are 2 main approaches to calculating how much money you'll make. Now, keep in mind, whatever you make, you also have to take into account these expenses if you're looking to see your profit, and if you need money for a living and you're using it from trading. So if you're trading for a living, you'll have to take these expenses into account. If you're making some money elsewhere to pay for these expenses, then of course you could use that money and just slowly take the savings and build that account up. In either case, so here we'll do the percentage way, okay? And then the other way is kind of the calculating way, okay? So this is, let's just say, on a per stock basis, okay? So you'll have 2 main ways. Now, in general, okay, the general average, the market moves up, or you make about 8%, okay? 8% on an annual or yearly basis. Now, that kind of equates to 0.75% on a monthly basis. And this is what I actually like to look at, because I like to look at the month to month of what I'm actually making monthly, right? Because that's kind of a monthly income. I don't usually look at a daily income. Even if I'm day trading, I don't look at the daily. And that is because, you might have some bad days. Some days you might not even trade. So at the end of the month is actually what I look at, because that's the end report. Am I profitable at the end of the month? So that's what I look at. So if you're looking for, let's just say, to be a little bit better, a little more active than the market, if you're looking to beat, let's say, the indexes, maybe you're looking at 1% a month, okay, on your income, which will equate to, multiply times 12 months. So you get 12% a year, right? If you're doing 1.5% to 2%, let's say 2% to make calculations easy, okay, a month, and that'll give you 24% a year, right? I'm doing it linearly, obviously, okay, so I'm just doing it in a line fashion to keep numbers simple. But of course, if you're putting that money back into play, and I usually don't take that money into account till the next year, you would actually have an acceleration curve that's a little more exponential. So again, those numbers are a little bit skewed, but it'll give you, again, a rough idea on a way to look at it, okay? So if we look actually on screen, I'm going to show you how this actually works, depending on your starting account balance. All right, so here we are in Excel, and if we take a look at kind of the first method as far as a percentage basis, right, so what I can do is just take Excel and say, okay, here's my starting capital. I'll go ahead and write this down. Okay, so my starting capital, let's just say, is $10,000. Okay, if that's your starting capital. And then my percentage gain that I'm looking to make on a month-to-month basis, I'll just say 0.01, right? That would be 1%. That's how much I'm looking to make. So what I'll do here is I'll go ahead and take the starting capital right there. I'll go ahead and add a couple dollar signs right there, so that way it always uses the starting capital. I'm just creating a little formula to do some calculations. Okay, and then what I'll do is I'll go ahead, put that in there. Now, the next part is I'll take that and multiply that times our percentage gain. And again, I'll put a few dollar signs in front of there. So we're basically making right there our amount. 1% of $10,000 is $100 a month, right? So, and then what I'll do is I'll go ahead and take this and I'll add this one together, and that'll be my total account value. And I'll go to the next row. I'll go ahead and take the previous row, which in this case is C4, and input it right there. Okay, so now my starting balance is right there. If I fill this down, you can see what I'll make is $101, right? Because it'll still keep the B2. They'll just use that value, and I'll go ahead and drag this down as well. So now my total account value, $10,201. So let me go ahead and format these for, let's just say, we'll format them for dollars, right? So currency, we don't need decimal points. So there we go. So you can see now things are in a dollar fashion. So that way we're always using that $10,000. And there we go. So now you can see if I'm making 1%, that's how it would go. So what I could do is continue to fill this down, right? So I could go ahead and continue to fill this down. And you can see how many months this would take, right? So if I'm down to about 50, again, we've used a few here, 3 rows actually to just fill in some variables. But if I go to about 50 months, call it 53, this would give me about a $16,000 account total within 50 months, right? Starting with a $10,000 account. Now, if I go ahead and let's say increase this to 0.03% per month, right? Now I'm looking to make $300 the first month, $309 the next month, $318. This is compounding it in, right? And this is not taking into account that maybe I'm only using half my account, right? If I had a starting account value of $20,000, only using $10,000, again, numbers would be a little bit different. But giving you some ideas, again, after about 50 months, you know, you're up to $42,000 starting with a $10,000 account, right? Now, if you started with, let's say, a $50,000 account, all of a sudden, you're making $1,500 every single month. If you had a $250,000 account, right, just making 3% is quite good and covers $3,500 worth of living expenses without a problem, right? So with many people, what they do is they go in and have a large nest egg that they make from a job or starting their own business. And then if you're making 1, 2, 3%, you're already the first month, as long as you're consistent, profitable, and you know what you're doing, right? If you're looking at 3% a month, you're making $7,500. Now, if you're changing this number to 1%, you're back down to $2,500, okay? Again, these things will continue to grow. Within 50 months, your account is $400,000 or a little bit more than $400,000, starting from $250,000. So again, you start playing with these numbers, right? Depending on your realistic situation, if it's 0.025%, and maybe you have, let's say, $750,000 from a retirement package, right? Or you just go back to 1%. Now, again, you're making $7,000, $10,000 every single month on a consistent basis. If that's your consistency, if that's what you're able to make. And this is just one way of doing it. And you can play with the numbers as you wish. If you only use half of your account, well, you put in, half in here. If you want to put in less, you can put in less. It'll just give you some ideas and numbers to look at. If you'd like to do a month calculation, right? So you say, okay, this is month 1, month 2. So you can go ahead and draw that down, and Excel will do some fantastic things for you. And the same thing here, if you want to do the year, okay, how many years does it take to, let's say, get to $1 million? So you just go ahead and start doing kind of this calculation. So this you could see is about 4.1 years. And you could go ahead and build this up, right? So if you're starting at, let's say, $200,000, and you want to get to $1 million and you're making 1% a month, right? At this point, you're only at $300,000. So you can see how long this would take. So we'll fill this down. And it would take you right around, let's say there's our $1 million, you're making $10,000 a month at that point, 163 months, about 13 and a half years, take into account some losses, 14, 15 years. But this again is taking into account 1% on $200,000. If you had $350,000, you'd get there a lot sooner. $350,000 will get you there in 8.9 years, right? If you're looking at doing that from a percentage basis and you change it to, let's say, 2.5%, now you get there also quicker, right? About 4.83 years. So again, all these things are relative based on your personal calculations. Now, the other approach that we have is actually calculating it based on the stock. So let's say you're trading stocks, and you have to know a few different things here actually. Your starting cash is the first thing you need to know. So let's say I've already drawn up some numbers. Let's say your starting cash, okay, this is what I start with, is $20,000. And I only want to use half. Right, so if I like to trade stocks right around, let's say, the $30 to $100 range, okay, so now you have kind of a price level. So if I'm doing a $50 stock, okay, and I only want to use half my account, that'll be 200 shares, okay. Then what you do is you start looking at, well, how often does this stock go up $1, $2, $3, a $50 stock? What's the average movement? Okay, so I'm looking at what's the average movement on price. I'm also looking at what's my win ratio. Okay, so how often am I winning? How often am I even trading? Maybe you're only able to trade 2 days a week, right? So again, it really comes down to you. There's a lot of factors. How much are your losses? Right? So are you losing quite a bit of those winnings, right? Because some people, they may say, okay, I win $500 every time, and then I win another $500, but then I lose $3,000, right? So this could be a big problem. So you do that calculation as well. So let's take a look at that calculation. All right, so the other approach to this is looking at how much you can make on a movement of the stock, right? To calculate how much you would make. So you could look at Starbucks. So let's say, again, you're trading around $50 to $60 stocks as an example. This one, the full movement of this move, and say you can catch it in 14 days, about $4. But let's say you don't catch the full move. You catch in about 6 days worth of that move, about $1.40. Same thing maybe with a move over here. Again, $2.21. So here you're looking at this move or this move or this move, or even to the short side, but you're not catching the full move. And in this case, in this situation, it's about $1.40, $1.50, $1.20, $1.25, $2, again, between 7 to 14 days. If you're trading a different kind of stock, like say LVS, maybe you're catching, $2.25, a little bit more, right? If it's a stock like Tesla, in a week here or two, you could have a $23 move, but the stock is more expensive, right? So in our example, let's just use Starbucks for the example, and you can of course modify the numbers for your needs. So here, let's just use about $1.25, $1.50. So what I've done is started a basic Excel calculation here. If we're starting with $10,000 or you're starting with $20,000, what this does is the amount points movement that you're getting, let's say $1.25, if you're doing $1.50, what happens here is you're taking this number right there, $1.50, and you're doing it based on the amount that you can get, and those are the shares. So, and then I just basically rounded it down, so say 325 shares. So now what you do is basically you take, okay, well, 325 shares is what I can do. So let's say 325 shares, and I multiply that times, well, you make $1.50 every time you make a trade, right? Again, this is a linear based approach, but it'll give you some insight. So again, you have right there, 487. So that's the amount you make. So I'll just go ahead and duplicate this number over here. Okay, so 487.50, that's the amount I'm making. Okay, so if I want to go ahead and calculate it, this is on a per week basis, but if I did 2 trades a week, Okay, if I did, let's say, 2 trades a week right there, be 4, multiply times this. Okay, and we'll just leave that to right there, and this one also be 6. Okay, so now I did 2 trades a week. I'm making $1,000 every single week. So every week I'm making about $1,000. So then what happens is, okay, I take this and multiply that times, well, let's say starting week 1, week 2, week 3, right? So this is our week. And what I can do now is do this calculation and say, okay, well, let's grow that. Okay, I'll go ahead and say every week we multiply that times 2. Okay, right here, take this number, multiply that times 2. Okay, so now I'm up to $19.50 in profits. Then I'll go ahead and fill that, right? Okay, so you got to make sure that the number is correct. Okay, let's see here. C6, right? So let's just do C6 and get that filled. And then let's just see here. There we go. That looks a little more reasonable. So now you can see by week 9, you're up in profits about $8,775, right? So you can continue filling this and say, okay, well, I want to get to 52 weeks, which is a year. You're making $50,000, right? You're in $50,000 in profits. So that's another approach that you could take, is to do some calculations. Now, if you go ahead and trade a little bit more or less, then of course these numbers would shift. Or you have to take into account the losses. So let's say you're only doing 1 trade a week. Now all of a sudden this drops this down in about half, right? So in 52 weeks, you're making about $25,000, right? So again, based on the account value that you have, based on the type of stocks you're looking to trade, how many points are you making on a trade basis? How many trades are you doing a week? Then taking into account some losses. Then seeing what is your end result. Doing some calculations will allow you to have a better approach to looking at these numbers and figures and seeing your end result in how your account grows. Now, if you want to just add this to your account, you take this account value, you could just go ahead and do that. And I can add that in with this, right? So that's your account value growth. So you start at 20,000, add that per week basis, right? So you continue to grow it right there. And, you know, in about 100 weeks, you'd have $68,000 starting from $20,000. So again, another way to do some calculations, but the whole point is just to give you some ideas of how to calculate the approach to seeing how much you can make, and then also how much money do you really need to get started. Well, again, you could start with just $500, but if you're looking to account for those living expenses, then you have to take into account the profitability or the profit potentials. And again, don't forget to take into account the losses. Don't forget to take into account your expenses, your taxes, those kinds of things. But this is just a starting point for you to do your own homework. All right, so I hope this gives you some insight to doing your calculations of how much money do you need to start with. Well, really, you could start with something as simple as $500, something as simple as $2,500. It could be $10,000, $20,000. Now, if you want to trade for a living, you have to know your living expenses first. Then, if you want to get a gauge of how much money you can make, well, here's 2 basic approaches. You could do the percentage way. Well, let's say, what are you making on a percentage basis, which you could also use on a percentage when you're trading the stocks. You could do those kinds of calculations. But let's say, you know, you're making a percentage of, you have 1 month of history already, transactions and trades you've done, and you're making 1% a month. Could be 12% a year. If you're doing 2% a month, 3% a month, 4% a month, again, the same kind of concept. Use that as a guide, and then, well, now do some calculations and project that into the future. And the same thing, if you're doing calculations based on the stocks, and you're doing it based on the trade frequencies that you do it, that you create on the market, then again, how much is your starting capital? Well, if you only have $1,000 to start, well, Then again, how much are you making on a per share or per trade basis if you're only using half of your account? How much are those losses? How often are you trading your wins? Take all those things into account and do some of your own homework. I can't give you a direct answer. I can't just feed it right into you because everybody's starting at a different point. Everybody has different kinds of expenses if you're looking to trade for a living. But take these two basic approaches, spend 10 to 15 minutes of your own time and come up with a number. And that way you're more precise. And you'll be even more precise if you actually have some trading history of stocks you like to trade and you want to calculate it this way, or maybe the percentage of return that you're making on a month-to-month basis. Again, you'll even be more precise if you have that trade history. So thanks for joining me this week in this week's lesson. I hope it gave you some insight. By all means, don't forget to take a look at some of the books and products that I have to offer, as well as the in-depth courses. But if you want to join me on a live session where I share with you some more insights about the stock market, how to trade, some pitfalls, or you want to ask me some questions directly, get on my newsletter list by clicking the button over here. And when you get there, enter your name and email address, and that way you get those insights as they are released. Thanks again, and in the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. Thanks again, and I hope to see you next time.